Okay. Good day. Good morning. Good evening. Good evening. Maybe good night. We have something to discuss. Yes. I want to make sure everything is good. One second. Okay. So let's get to it. Let's talk about how smart money tricks you into losing every single time. This is a chart of 23andMe. And even though I don't trade this or hold any positions in this chart, wow. If you trade purely on technical analysis, wow. Why would a chart or an instrument that within it hasn't even been 10 years on this TradingView platform, and it could be different on a different platform. I'm going off of TradingView. This has only been around since 2020. Started out at $197. Today, 67 cents. Was this ever in an uptrend? It was for a bit. Not after February the 1st, 2021. Let's get to it. You think you're trading against other retail traders, aren't you? You're wrong. You're trading against the sharks, the sharky sharks, the hedge funds, the institutions, the market makers. And let me bring you in on a secret. This is something I want you to hear me say clearly. Let me check to see if we have connected. Hear me say this quickly. They know exactly how to make you lose. They're not sitting around hoping magical moves. They're not hoping that price magically moves in their favor. They control the game. They move the market. They set the traps. And they take your money before you even realize what happened. So today, we're going to break down how smart money manipulates retail traders and how they play on your emotions. And most importantly, this is the key line sinker. The most important thing you will learn today is how you can stop being their victim. So if you're watching this live, let me check to see if you've ever had a trade hit your stop loss perfectly before reversing in the original direction of the trade. Type me in the chat. No pun intended. Type me in the chat. If you're watching the replay, type me in the comment section. And let me go ahead and get the party started because there have been trades where it seems as if, well, sheesh, I put my stop here. I put my stop right under this candle here. Oh, it's gonna go up, and shoo, turned around, took off. Let's talk about the illusion of free markets. So you might have heard me say this before, and I'll say it multiple times, that the market, it's not random. Nope. I know what they told you. I know they told you it was chaotic. It's not this free organic exchange of buyers and sellers, right? It's not just, hey, I got something for a dollar. You want to buy it for a dollar? It's not an auction. It's controlled. Every price move is calculated. Every breakout is planned. Every stop hunt is intentional. Institutions manipulate price action on purpose in order to take liquidity from retail traders. You think you're seeing a breakout, don't you? No, you're seeing a trap. You're seeing a setup. This is a play that they use designed to make you react. And once you take the bait, what do? They pull the rug out from under you, don't they? Very common in meme coins, rug pulls. So let's talk through a couple of the classic smart money traps. And if you're not taking note on these, I would recommend that you do. If you're not taking notes on these classic smart money traps, I would recommend that you do. So the first money trap that they take, smart money trap, is a liquidity grab. Now, everybody has their own definition of how to see them on the chart, but I'm going to give you the psychological definition. A liquidity grab is how institutions force traders into bad positions. They anticipate and know where traders, retail traders, are placing their stops, their limit orders. And what do? They'll push price into those levels to grab liquidity before moving in the real direction. The example I like to give is a teenager that wants to go and hang out with her friends. And this isn't an ordinary teenager. She's a very smart young lady. She calculates that she needs about $25 to go hang out with her friends at the mall, and they can go get smoothies and maybe pick up something from Five Below. She sees her mom and dad in the living room, and she says, well, if I ask them both at the same time, they might tell me no. So what does she do? She calls her dad in first. He's an easy target. She's a daddy's girl. She tells her dad, "Hey dad, I'm going out with my friends. Hey dad, can you give me $30?" Well, honey, I only have a 20 on me. Okay. Boom, she takes it. Dad goes in the other room. He's feeling pretty good. It's like, yeah. Then what does this smart teenager do? She goes into the living room. She sits across from her mom and she says, "Hey mom, I talked to dad and he knows that I'm going out with my friends to the mall. and I just need $30. And her mom says, here's 25. This smart 13-year-old girl just walked away with how much? $45. And she'll be long gone at the mall before they even realize what happened, if they even talk about it at all. So this liquidity grab is the same thing. It's when the institutions take money from both sides. Let's talk about the second smart money trap. These are classic stop hunts. Months ago, on one of the lives, one of the statements that I made is that they don't hunt your stop, they hunt everybody's stop. And if you've ever placed a stop loss right below a key level only to get stopped out before price rockets in your favor, that wasn't bad luck, my friend. That was smart money collecting your money. I mentioned yesterday in the live that I've studied the broker's playbook. I've watched enough documentaries to know. I've seen behind the scenes of institutions. I've traded with high network traders for a very, very long time. The brokers can see where you put your stop hunt or your stop loss. The brokers can see if you're over leveraged. They can see the percentage of your account that you're risking. Of course, they can see your open positions. And what a lot of people don't realize is the whole A B book conversation, where if you place a sell with your broker, 90% of brokers take the other side of your position. That's another conversation. So we have two of their traps, the liquidity grabs, the stop hunts. The third trap, and you will see tons and tons of videos on this. Oh, the London breakout. They do false breakouts. Was this a false breakout? Perhaps, perhaps not. The funny thing about trading is that you can be right and wrong at the same time. Depending on your psychological maturity, you could have entered a sell here and be in the money, and you could have held that sell too long and been punching the air. So they use false breakouts when you see price break a psychological level, you see it break a resistance level, you see it break a support level. When you see it break a resistance level and you say, oh, this is resistance, it's breaking out, I'm going to go long. And then bam, price reverses hard and fast. And now, unfortunately, you are trapped. So, what's the natural trader behavior? You panic, you close the trade at a loss right before price moves back in the original breakout direction. Be honest. I'm sure you've fallen for that trap before. If you're tired of being manipulated, I want you to drop a fire emoji. Either if you're watching the replay or you're watching it live right now, drop a fire emoji if you're tired of being manipulated, because what we're going to talk about right now is how to stop being a victim. How to stop being a victim. How do we start to trade like smart money? If you want to stop being the prey, you need to think like the predator. And this is a psychological shift that's difficult for some people to make. Some people have a belief system that prevents them from making the leap from prey to predator, and that's okay. My encouragement to those people would be to find a different career. You may have heard people say that trading is a zero-sum game. You may have heard people say, well, if you win, that means somebody else loses. If you have a belief system that subconsciously is causing you difficulty with making the leap from prey to predator, here is how I reframed that conversation back when I started trading. I started to decide and I started to believe that the moment that I enter the trade is the perfect moment for the person that is wanting to exit the trade. The moment that I enter is the perfect moment for someone else to get out of their trade. The moment that I exit is the perfect moment for someone to enter. The moment that I buy is the perfect moment for another person that's willing to sell. So if you want to learn how to trade like smart money, what's one of the things that we need to do? First, you got to understand liquidity zones. If you are still trading support and resistance alone, please evolve. What I want you to do is start looking for the areas where stop losses are likely stacked, because that's where smart money is going. Think about it. How many YouTube videos, how many gurus do you have to watch that say, oh, well, I have a 25 pip stop? Oh, sheesh. You have a 25 pip stop? Okay, no problem. 25 pips. Thank you. Now, I share my style of trading, and the fact is, of course, with managing a trade, having an area where you define the stop, where the market would invalidate the trading idea. The way that I trade, I don't enter my stop losses into the system, because if you decided to buy here and to put your stop under this level, what happened with this candle right here? Let me zoom in so you can see it. I'm going to buy right here, or I'm going to buy at $13. I'm going to put my stop right below $12.75. Shoot, it took it. And so you don't have to do this. This is not considered financial advice. My style of trading would tell me that the market has to close under that level. And so that means that we have to make the right risk assessment, right? There's some adjustments that have to be made. So that's the first thing that you're going to do. You're going to start to understand liquidity zones. The second thing that you're going to do to go from prey to predator is you're going to wait for confirmation. Don't act emotionally. Don't react emotionally. Wait for those real price action signals that confirm a breakout before jumping in. Because you want to know one of the biggest mistakes that traders make? One of the biggest mistakes that some traders make is chasing a move that smart money has already planned to reverse. Right? Think about it here. And I know that this is a daily chart. Smart money's pull this candle back. Now, this is a very bullish candle, right? Very bullish. This day gave us a little bit more. Probably we're adding, adding, adding. And then what happened on this day? So the plan was already shown. Okay. And the third thing that I would encourage you to do, if you want to switch from being a victim in the market, follow the institutions. Don't fight them. Follow the institutions. Become a friend. Be a market maker. Smart money moves in waves. So if you see price suddenly spike in one direction, ask yourself, is this a real move or a liquidity grab? Are they getting ready to build orders before they reverse? What are they doing here? Ask yourself, who is actually winning in this situation? Retail traders or institutions? Ask yourself, who is on the other side of this trade? If I buy right here, who is on the other side of this trade? Well, the market had been going down for a bit and it did a quick reverse off of this level around $13. So if you buy right here, chances are you would be buying from someone that is participating in this sell position late. Might be wise. Okay, well, it did at psychological price level, closed above it, $13, closed around $13.40. I like that. That sounds good. Hmm. Don't make the same mistake that we talked about over here where you're saying, well, if it closes, I'm gonna put my stop at $13. And then guess what it did? Shoot, took that money. So patience in the market is your biggest weapon. Retail traders mostly lose because they react. And smart money constantly wins because they plan. So the challenge for you today is to go back to your past trades, find one, just one, where you fell into one of the three smart money traps that we talked about. So whether it was a stop hunt, a false breakout, or a liquidity grab, analyze it to hell. Analyze it until you can't analyze it anymore and figure out what you missed and how you could have avoided it. That is your challenge. And so I want to hear from you. If this video gave you an aha moment, drop a comment below. What's the most painful smart money trap you've ever fallen for? We want to expose these tactics together so that other traders can learn, so that you can continue to grow and evolve as a trader. So thank you for joining the live and thank you for watching the replay. And I would certainly encourage you to subscribe because tomorrow we are going to reveal the deadliest mistake that traders make right before blowing their account. So you don't want to miss that one either. And until the next time, trade safe and take care.